Hello and welcome to the Law of Money. Surya Bhatia, as always, joins me. Let's talk about risk profile. A lot of financial planners like you say that before you even start investing, it's important to know your risk profile. How does one discover one's own risk profile?
This understanding, when you talk about risk profile, you can actually break risk profile into two parts. You can call about risk capacity. You can talk about risk, one is risk capacity, one is risk appetite. Now, capacity is very easy to understand. Capacity is maybe depending on what your incomes are, what your expenses are, what is my family lifestyle, what are my needs for my family, how many dependents I have, will determine the capacity of risk. So any third person can also determine the capacity of risk without even asking you too much. Problem comes when it comes to risk appetite. That's only belongs to you. And there, how much money you have or how much money you don't have doesn't define this. It's your level of risk which you can take. For example, these last 7 days, answer yourself. Last 7 days, markets down 6% absolute, 5% absolute. What are your reactions? That defines how much appetite you have for risk. I'm assuming that all the investors, hopefully, are invested in equity markets for long term. And if that's the case, then you have to answer very truthfully to yourself that how will I react in these conditions? Another 15 days, another month, maybe this quarter, markets may be down 5-10% more. How will you react? If you feel panicked, if you feel no, I want to get out of the equity markets, I cannot take this risk, I cannot stomach that volatility, then equities are not meant for you. At the same time, reading more about it, understanding what about these assets are, understanding the performances will give you more confidence. That's why we always say, please read more, gain the knowledge, understand from your advisor or from the people through whom you are investing that what are the risks attached to it. As you gain more in knowledge, confidence comes to you and the awareness also helps you to increase your appetite. So you can find ways and means how to increase your risk appetite. But if you don't have it, reduce your levels of equity markets and don't follow the herd mentality. Just because someone else is putting money in equities and he's supposedly making money, I'll also make money. Understand your risk and your return should follow accordingly.